Welcome back. We learned about the FIFO method of accounting for costs for inventory. We are now going to learn about LIFO, last in, first out. Looking at our table, we're starting on January 1st with 100 units of item 127B that cost $20 per unit. Use the table in your notes to fill it out as we continue on. On January 4th, we sell 70 units on account of our item at $30 each. We're selling 70 units. The only units we have in are the 100 units at $20. So we're going to use those for our journal entry. So go ahead and record the journal entry for selling the 70 units at $30 with a cost of merchandise sold at $20 per unit. Does your journal entry look like this? Accounts receivable is debited for the $2,100. Sales are credited. Then you also have to record your cost of merchandise sold, and that was at $20 per unit. Now we're making another purchase. This is also a good time to record what we've already done. So our 100 units, we've sold 70 of it. That means we have 30 units left at $20. We now purchased 80 units at $21. So now we need to do our journal entry. Take 80 units times $21. That's the amount we owe for accounts payable. We've also increased our merchandise inventory by that amount. Pause and try your journal entry. Now that you've tried your journal entry, let's see if you're correct. Merchandise inventory increases with a debit because it's an asset for $1,680, and our accounts payable liability increases with a credit of $1,680. You'll notice again, we have our chart here at the bottom, the dates of what's happening, quantity, costs, total costs. We have cost of merchandise sold as well when we make a sale, and keeping track of our inventory in total. Now we make another sale of 40 units. If we remember, we had inventory of 100, we sold 70. That left us with 30. 30 at $20. Then we had 80 at 21. If we're selling 40, we're doing last in, first out. So this sale, we're actually going to sell from our last purchase. So we're going to sell 40 items at $21. Then that means we will end up having 40 of those still left. Go ahead and journalize the 40 items at $21 cost of merchandise sold and 40 units at $30 for the sale. Pause and try your journal entry. Hopefully your journal entry looks like this. Accounts receivable, you're billing them for $1,200, sales are $1,200. That is the number of units times the sale price. Cost of merchandise sold, number of units times the last in, which was the $21 items, for a total of $840. We're going to have another sale. I'm going to go ahead and record again, which you should have on your sheet already. 100 units, we sold 70. That left us 30 here. Our next sale was $40, but last in, first out. Last purchase was the $80 one, so that leaves us with 40 at $21. We're selling another 20. Is that going to be at a cost of $20 or $21? Since we're talking about last in, first out, the last purchase, most recent purchase we made was at $21. So we're going to create our journal entry for sales and accounts receivable, 20 items at $30 each. Then we're going to record our merchandise inventory and cost of merchandise sold, 40 items at $21 each. Pause and enter your journal entry. Your journal entry should look like this. Accounts receivable, $600. Sales, $600. Taking the number of items you sold times what you sold them for. The cost of merchandise sold using the LIFO method, last in, first out, gives you $420, and your merchandise inventory has decreased by $420. Let's continue. Finally, we have another purchase, 100 items at $22. This is now our last in. So our next sale would come from this purchase. And until we sell all of those, we won't go back and sell the remaining from our previous units. We're going to take just whatever is purchased last until it is gone. Try your journal entry. Pause. Your journal entry should look like this. You've increased your merchandise inventory by $2,200. Your accounts payable is also increased by $2,200. So keeping track of all of our merchandise, the total cost of merchandise sold for each of those entries would be $2,660, and our ending balance of inventory is calculated of the items left over. We have the items at each price, 100 at 22, 20 still at the 21, and 30 are still left at the 20. Let's try another one. Beginning inventory, purchase, and sales for the item are as follows. Remember, you're using the last in, first out method. Assuming the perpetual inventory system, which is what we've been using in class, you're going to determine the cost of merchandise sold for the November 21st sale. So make sure as you are finding the answer, you're going to be calculating this sale. Last in, first out. What's the last in? This purchase here. So you're selling the 45 units using the last purchase. That should help you calculate the cost of merchandise sold. Then you need to calculate the inventory that's left. Whatever we haven't sold from this purchase is left, and this is left. Go ahead, pause, and see if you can calculate the answers. Using some simple multiplication, you should calculate your cost of merchandise sold to be $315. 45 units at the last in purchase at $7. Then calculating your ending inventory from the 60, you sold 45, so you have 15 left at $7, and you still have the 8 units left at $5 from the previous one. The 8 units come from, there were 40, we sold 32, so now there are 8 of those left. Make sure you don't miss those calculations. So here are your answers again. Your total inventory left, you have 23 units for a value of $145. That concludes this lecture. Feel free to repeat it and go back and listen to anything you may still be unclear on.